Hey guys, this is a question again related to Amex, and Warren. It came from one of the shareholders. We can get to it over the weekend, but relates to this. Talking about walking away, the shareholder noted that on American Express's stock, it is now underperformed over a 1, 3, 5, and 10-year period. And the question the shareholder asked was, under what conditions would you decide to walk away? What is it that you would have to see where you decide, okay, you know what, I actually think this is going in the wrong direction?
Well, I certainly would decide based on how the stock price behaved. I was on this program in March of 2009, and at that time the stock was 11 or 12, and I remember Joe asking me why I didn't buy more of it. Well, it was because the Bank Holding Company Act prohibited us buying more. Fortunately, the company kept buying in stock, so I think our interest back then may have been 11 or 12%. Now it's approaching 16%, and we haven't had to lay out a dime, and we've got a much more valuable company. So the stock price has nothing to do with us changing our mind about the company. It may, if it goes up a lot, it could get to where we thought it was selling for a lot more than it was worth and that we could find something else. But if we like the company, we like the stock price to go down, because if American Express is going to spend, we'll say, 6% of maybe $3 or $4 billion buying in stock, the more shares they get for it, the better. But we look at the business, and at the business, you will see that the number of cards is growing at a decent rate. The amount spent per card, which is far, far, far higher than Visa or MasterCard, keeps growing. The credit metrics are terrific. The expansion in merchants is terrific. So I feel good about it.
Hey, Warren, real quick, I
recognize it will. Go ahead.
No, I was going to say, one of your other shareholders mentioned that this investment is clearly still in the black. It's a big moneymaker. Do the tax implications of a capital gains weigh on you at all in terms of whether you would stay with a company, even a company that you thought was potentially challenged for a bit?
Well, yeah, sure. Taxes make a decision. Enter into the decision as to whether to sell A and buy B. I mean, if you sell A and you've got no tax basis on it at all, you pay a 35% tax at the corporate level, far higher than at the individual level. So if we were to sell our Coca-Cola, for example, it's almost all profit. So we would have roughly 65 dollars to buy anything else. And that means the case for switching has to be more compelling. We still do it. I mean, we sell stocks with very substantial capital gains taxes involved, but it's obviously a factor.
Well, let's talk about that, because, look, I've actually had questions come into me from people this weekend, too, just suggesting if you look at American Express, if you look at Coca-Cola, if you look at IBM at this point, are these positions that you have some affinity for and companies that you have this legacy with that you would never sell? Is that?
No, they're not things I would never sell. No. We would not sell businesses except for the reasons that we lay out in our economic principles. But we want anybody that buys Berkshire to understand how we think. So we have a section in the back, which I've run for decades, called the Economic Principles of Berkshire Hathaway. And it says we will not sell controlled businesses unless they either have major labor problems or they promise to eat up cash.
Those are controlled businesses. We're talking about companies where you may be the major shareholder but not a controlling.
Well, then in terms of companies where we're a shareholder but not a controlling shareholder, there isn't anything in there in those economic principles that says a thing about whether we'll buy or sell.
Would it pain you to sell American Express? Would it pain you to sell Coca-Cola?
No, I don't think so. No, it would. No, in fact, I probably, if that circumstance presented itself, I probably enjoy it because I had something I thought was going to do, where I was going to do better with the money. No,
you staying in these stocks is a conviction that this is the best place for your money.
Yeah, and that, now bear in mind that moving around many billions of dollars is not easy for us. So it's not something we make if we think there's a 1% differential or a 3% differential, and there is this tax factor. So there's two different factors that push towards staying in the same place. Mm-hmm. But if you ask me whether I would feel a pain in the heart, like the girl I've been pursuing for years left me or anything like that, no.